In less than 60 days, Rivian may surprisingly have a new owner. Remember that recently Elon Musk issued a grim warning saying he expects one of Tesla's main electric vehicle competitors, Rivian, to go bankrupt in 6 quarters. Well, this might become a reality, except, of course, a big automaker comes to its rescue.
Welcome back to the Watch List. I'm Nicole Petalides, live at the New York Stock Exchange. Time to talk all about electric vehicles. Of course, we've heard from Rivian and Lucid, and we're seeing some down arrows today in a big way. For that, we welcome in our panel. Henry Green's with us, investment strategist at Crane Shares, and Corey Johnson, chief market strategist at the Futurum Group. Thank you both for being with us. Corey Johnson, I'll start with you. What was your takeaway from what you heard? Rivian, I'll start with that, which was down 28%. I'll double check what it's down. Right now, 25%. I mean, it's getting crushed. What are your thoughts? Is it ever catching up?
Well, I think, look, Rivian and Lucid coming out with bad news, both at the same time. They have a lot in common, and they're very different companies. The Rivian results are really about, they're really about the same thing. They're about this moment that we're seeing across the electric vehicle industry when we're going from the early adopters to maybe the early majority. It's Jeffrey Moore, the marketing strategist, the organizational theory guy. He talks about this crossing the chasm and the difficulties companies have when they have these really cool technologies that grow really fast, but when they want to jump into the mainstream, crossing that chasm is really difficult. And I think you see that from both these companies, while they're very different, both dealing with this difficulty of going from early adopters to a bigger market and the challenges that come with that in every respect, not least of which having the right products at the right time.
Right. Look, Rivian needs a lot of money. They really missed on their production outlook here, Henry. They're telling us 57,000 instead of 81,000 vehicles, a far cry from Tesla's 2 million plus. So tell me what you thought about Rivian, Henry.
Yeah, hi, Nicole. Thank you for having me. I think that Rivian's earnings, it's interesting because they actually beat slightly on the top line. Of course, they missed on EPS. I think that not only their earnings, but the market's reaction just shows how sensitive markets are right now to electric vehicle companies. Yes, they have reduced their production outlook. Their outlook was lower than most had expected. And one of the reasons cited was slowing demand due to higher interest rates. And well, while that's true, I think a bigger issue here is the Inflation Reduction Act, which has actually, created better monetary financing conditions for EV makers, but it's also created more competition because now these companies, which, as was just said, were, focused on early adopters and people who were big fans of EVs, now they're competing with the likes of GM, Ford, Stellantis, who have much larger production bases and are much better capitalized. So that's a concern here.
When you think about Stellantis and the rest of the big three, or just the competitive nature abroad, Henry, what EV makers are best positioned right now?
I think it's hard to say. I think that in the United States, it's very much up for grabs. Right now, we like to look at, of course, we look at international markets too. In China, we see BYD. I think they're now one of the largest car manufacturers in the world. Now, they don't only focus on EV, but they've been doing increasing numbers in electric vehicles in China. And then and then going back to the US, I think Tesla, still has the brand. Obviously, they have the more economical, better priced models. And that's a place where Rivian, they haven't gotten to the production of those lower priced models. And of course, Lucid is focused only on the luxury sector. So I think really to see wide adoption of EVs, you need to see these more economical kind of mass market models.
Yeah.
In 2021, Rivian stole the show with his shiny pickup truck, the R1T. However, lately things haven't exactly been smooth sailing for them. It's like they took a wrong turn on the electric highway and ended up in a bit of a ditch. Right now, despite being the first to market with a full-fledged electric pickup, Rivian has hit a few bumps in the road. Its production levels haven't exactly been setting the world on fire, and it's also struggling to ramp up production. which means fewer Rivian trucks hitting the streets and less cash flowing into their pockets. Also, Rivian's finances are a bit wobbly. They're burning through cash really fast with no clear path to profitability yet. Things are looking a little tense. So where does GM come into this picture? Well, that's the big question we're about to answer. So stay with us as we explore the many possibilities of this potential merger.
General Motors reporting quarterly results. Let's get to Phil LeBeau with the numbers. Morning, Phil.
Good morning, Mike. This is a beat on the top and the bottom line in the fourth quarter for General Motors, earning $1.24 a share. The street was expecting $1.16. Revenue well above expectations, coming in at $42.98 billion. The street expecting $38.67 billion. Remember, in the fourth quarter, you had the UAW strike and a number of adjustments the companies made after it. So keep that in mind as we go through the fourth quarter numbers. Free cash flow $1.3 billion versus the estimate of versus $4.4 billion a year before that. EBIT adjusted income $1.75 billion versus $3.79 billion the previous year. The EBIT adjusted margin 4.1%, down from 8.8% in the fourth quarter of 2022. North American EBIT adjusted margin of 5.7% versus 10.3% in the fourth quarter of 22. One important note regarding China: the company's China equity income in the fourth quarter, $93 million. And we'll talk about China and what GM is expecting in the first quarter as part of its guidance here. For 2024, the company's EPS guidance of $8.50 to $9.50 is well above what the street's at. The street's at $7.87 right now, with EBIT adjusted income expected to be $12 to $14 billion this year. Free cash flow for the auto division, $8 to $10 billion. The company is still saying that it expects to be EV profitable in the second half of this year. That's an important benchmark they're putting out there. Also, they are expecting a loss in the first quarter from their operations in China. That speaks to growing inventory and a market that is slowing down overall. Bottom line is this, guys. They are expecting lower pricing and pricing headwinds and higher costs, but General Motors in the fourth quarter beating the street on the top and the bottom line.
GM is like the big daddy of the auto industry, and it's also trying to make a big splash in the EV market. The auto company has the resources, the experience, and frankly, the cash that Rivian desperately needs. So teaming up with a company like this could be the best strategy for Rivian. Now the question is, would a GM-Rivian merger be a match made in EV heaven or a recipe for disaster? Well, we're about to find out. Hello, everyone, and welcome back to Tesla Tomorrow. On one hand, this collaboration could be a win-win situation. Rivian gets the financial backing and manufacturing expertise that it needs to get back on track, and GM gets access to Rivian's innovative technology and established brand in the electric truck space. EV startups are facing a bit of a reality check right now, and they're struggling to stay afloat financially. You see, building cars, even electric ones, is no walk in the park. Setting up factories, tooling up production lines, and training workers takes time, money, and a whole lot of planning. For instance, the heart of any EV is its battery, and guess what? They ain't cheap. These lithium-ion power packs are like the fancy ingredient for EV batteries, but they are expensive. And with the demand for EVs skyrocketing, the cost of these batteries isn't exactly coming down anytime soon. So it's not surprising that these startups are having a hard time, which is why they may need the big boys of the industry to save them. Before we continue, if you like this type of content, make sure to hit the like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with Tesla. The EV market is getting crowded faster than a music festival on a free weekend. Established automakers are jumping in with their own electric offerings, making it harder for startups to stand out. Even the perceived drop in EV demand is worsening the situation, making it difficult for EV makers to make a profit on their cars.
And so how do you price that into the valuation from your perspective, Tom?
Yeah, so I look at the guidance that they gave, 10 to 12 billion of EBIT, and my EBIT actually didn't change all that much. It stayed at around 10 billion of EBIT, and the reason is I do think these EV losses that they're calling for, if you annualize the Q4 losses, you get something like negative 6.3 billion, and they're calling for 5 to 5.5 billion. So, I think that could be a challenge for them. So I'm calling from the low end of their guidance range, and then I do a sum of the parts valuation, and I come out to a $12 per share valuation. That isn't to say that, the pro business they have is amazing. It's one of the best businesses in autos. It's just that EV drag is just really painful for these guys. It's half of their entire EBIT is coming from that. And we just don't have the evidence yet that that's going to turn around next year, even though, they say it will.
Michelle, we've seen the price wars play out. Obviously, it has been a challenge, a headwind here for so many of these automakers. When you take into account, Michelle, what we heard from Jim Farley last night, also the fact that Ford now seems to be focused on this cheaper EV, do you think we're going to see continuation of these price wars, given the fact that consumers are very much still under pressure?
Absolutely, especially in the EV segment. We have double the inventory of EVs that we have of regular gas power or total vehicles. And so that means there will be more incentives, there will be more discounts, there will be more price cuts. So it's going to be a very cutthroat business in the next year or two.
And with that in mind, what do consumers need to see from what you're hearing on the Cox Automotive side in the broader infrastructure for electric vehicles to feel comfortable buying into them, to get to some of the targets that Tom was just talking about these automotive manufacturers have laid out?
Well, first of all, price. That's always been the number one barrier for EV adoption, especially as we move into the more mainstream buyers. So far, a lot of the EV buyers have been very affluent. They probably have multiple vehicles in the household, but now we're moving into that heart of the market, and that's going to be a bit of a tougher sell. So price is one, but the EV charging infrastructure, it needs to be more expansive, but it also needs to be maintained, because we have seen just horror stories there was one in Chicago during the storm of, people waiting for chargers. They drive up to one and it's not working. So that's got to be worked out as well.
Just lastly, would love to get an answer from both of you on this. When you think about the interest rate environment and how much consumer sentiment is tied up within that, especially for financing large purchases like automobiles, if we do see cuts and the pace of cuts perhaps that were anticipated by some consumers and economists out there for this year, what will that do in terms of perhaps a dam-breaking type of moment for people getting back into purchasing in the automotive market? And Michelle, I'll go to you first, and then Tom, would love to get your thoughts.
It certainly will be a huge help. High interest rates have pushed a lot of people out of the market, have pushed the monthly payment really high to the point that some people just walk away. So that will be a huge benefit. I would say the number one thing for consumer sentiment, though, is gas prices. If you watch gas prices, that's where consumer sentiment goes. But interest rates are not far behind.
Fair point. Tom?
Yeah, I totally agree with that. The interest rate environment is what Elon called out every one of his earnings calls, right? It totally impacts affordability. What we're noticing, though, is that the pricing is at all-time highs. So the concern would be is if affordability is in question, if pricing collapses, that is really problematic for these.
So we've talked about the possibility of GM swooping in to save the day for Rivian. But what about the other big names in the EV game, particularly Tesla? How would a GM-Rivian merger play out for Elon Musk and his electric car empire? Let's find out. But I must say that this requires a little bit of your attention, as the subject can get quite complex. So on the surface, a GM-Rivian merger could be seen as a positive for Tesla. After all, a stronger Rivian backed by GM's resources could potentially lead to increased competition in the EV market. Now, in theory, this could push Tesla to innovate further and stay ahead of the curve. Also, a more robust Rivian could distract some of the competition's focus away from Tesla. So there's some good news there. However, that's just one way to look at it, because if the merger happens, it won't be all sunshine and rainbows for Tesla. Let's put it this way. There are potential downsides for Tesla to consider if the merger eventually happens. One, a stronger Rivian, especially with GM's manufacturing muscle behind it, could nibble away at Tesla's market share, particularly in the electric truck segment. This could be especially concerning for Tesla if Rivian manages to iron out its production issues and get more vehicles on the road. Also, a GM-Rivian merger could have a ripple effect across the entire EV market. If the merger proves successful, it could encourage other traditional automakers to jump into the EV game with renewed vigor. And this influx of competition could put pressure on Tesla's prices and force the automaker to be more cost competitive.
All that considered, I mean, when we think about what this means for investors going forward, there is the consideration of what margins will look like as they've initiated this broader pricing strategy, and a pricing war has essentially ensued as well here. When we think about, Will, ultimately how that translates through to what investors should expect, and the kind of appetite or propensity for investors who this week have seen shares move lower, and some of them saying for an environment where buy on the dip is once again kind of rearing its head as a theme again. Is that the case for Tesla?
I don't believe so. I think people should be buying this dip. I think that people should look at owning Tesla as owning the most efficient car company of the next decade. I think there could be a world in our future where F-150 Lightnings are built with Tesla batteries or on Tesla chassis. I think there could be a future where Tesla is the mainline provider of all EV technology to many others, regardless of what the badge on the hood is. And when you look at Tesla, if you are to look at it as a multiple of revenue, if you are to judge them that way, you're not going to like what you see. But if you look at their growth, if you look at how fast they're able to make cars, and you look at how cheaply they're able to produce vehicles, which means they can sell them cheaper, which means they can still make a profit to a larger demographic of our population. I think all of those things are good for Tesla to continue to be a cornerstone player in this EV world that we're all leading ourselves into.
Daniel, let's talk about AI, because Adam Jonas over at Morgan Stanley is saying that there were no real AI rabbits pulled out of Tesla's hat here during the quarter. When you stack up what's realistic versus some of the ambitions that we've heard from Elon Musk, do you think some of this hype is a bit overdone?
I wouldn't say that. So I mean, you take what you've been hearing him talk about on the AI front and also the Chinese front, and I think that these go hand in hand right now. He sees the Chinese OEMs like BYD, Geely, NIO, XPeng, they're his main rivals down the road. So these companies, they're not just gunning to be top dogs in EV, they're aiming to be native smart EV companies. So beyond batteries, they're putting serious effort into cutting-edge ADAS systems, infotainment, control systems. All of this is going to be based upon AI. So, Eon's clocked their rise in China. He knows they're eyeing Europe, maybe even the US. And so to keep up, he understands that they need to stay at the forefront of AI.
And at the forefront of AI, how much spending do you think Tesla still needs to do in order to really get its hands around what AI not just could be for its business, but the resources that really need to be layered in at this juncture in order to get that kind of long-term ambition right, Dan?
Well, I mean, again, he's looking at his main competition down the road, and they're throwing money at this, hand over fist. So he's got to keep up as much as possible, and he's not just going up against other OEMs like he would in the US or Europe. He's going after the entire industrial policy of the Chinese state.
Greg, bringing back here to what this really tells us about demand for EVs, because that's also at the crux of this issue when we talk about the fact that the guidance or really lack thereof, leaving investors with a lot of question marks. Is there something going on here that might be out of Tesla's control in terms of the fact that EV demand, when you take a look at the automakers across the board, hasn't exactly lived up to those initial expectations? And then what that tells us about names like GM, Ford, Toyota, the list goes on.
Yeah, I think basically we've seen the EV market chill a little bit. I think people have, many of the early adopters who have wanted their EVs have been able to get them. There's a great sort of catalog of EVs out there right now from Tesla, from Volkswagen, Mercedes, General Motors, you name it. And the number of nameplates I think is expected to rise perhaps around 50 or 60 this year. So the choices are going to get even better. What's I think frustrating Tesla and other automakers is, the incentives that come from the government, as well as just the never-ending sort of infrastructure question. Now, Tesla got out ahead of the game with its supercharger network, so they're well positioned, and other automakers are trying to join that as well. So that
a merger between GM and Rivian could definitely have several notable effects on Tesla and the EV industry at large. But what if it doesn't happen? Now, it could be that Tesla would be in a position where it's no competition apart from the Chinese EV makers. This is assuming that Rivian and other EV startups, including established automakers like GM and Ford, don't survive the challenges of EV production. Now, while this could be great for Tesla stock, it could be bad for EVs. Let me explain. Imagine the racetrack of the electric vehicle EV industry. Tesla, the sleek and powerful sports car, zooms ahead, leaving competitors in the dust. Sounds cool, right? But what if in this scenario, Tesla was alone, and no other car dared to challenge its dominance? Well, this might seem like smooth sailing. The lack of competition from companies, especially aggressive ones, could actually hinder the broader adoption of EVs, and this is why. Competition fuels innovation. When multiple companies are vying for the top spot, they push each other to constantly improve. Now, Tesla, lacking a pressing need to innovate in the absence of rivals, might be less likely to invest heavily in research and development, R&D, for things like battery technology, charging infrastructure, or vehicle design. And this could slow down the progress of the entire EV industry, keeping prices high and hindering mainstream adoption. Think of it like this. If there were only one smartphone brand, would you still get the sleek design, powerful cameras, and affordable prices that we see today? Competition drives progress, and without it, the entire EV industry, including Tesla, might stagnate. Likewise, a monopoly can stifle consumer choice. While Tesla offers a range of models, the lack of other options may limit the variety available to consumers. This is especially true in terms of price points, features, and catering to different needs and lifestyles. Similarly, without competitors offering diverse options, EVs might remain out of reach for many potential buyers, hindering their widespread adoption. Although competition itself seems like a big issue, healthy competition can foster market trust. When multiple players involve, it encourages transparency, quality and control, and a focus on customer satisfaction. But with only one major player, concerns about potential monopolies, unfair pricing, and limited service options can arise. And this could create a sense of distrust among consumers, making them hesitant to embrace EVs as a whole.
Kiko, it's really interesting. We actually are seeing increasing interest on cars.com, our marketplace site, for electric vehicles, but we're actually seeing twice as many buyers shopping for hybrids and plug-in hybrids. And I think part of this is due to the fact that consumers really are interested in plug-in technology. They're interested in getting better fuel economy, but they don't necessarily yet feel comfortable going to a full electric vehicle. So instead, a plug-in hybrid provides that middle ground and a great transition. You get used to plugging in your car, just like we got used to plugging in our phones. This way, a plug-in hybrid allows that transition for consumers.
Is it just about the infrastructure, though? Are you finding that costs, now that they're coming down, is also generating more interest? And what's that price point?
Yes, it certainly is both pricing and infrastructure. Consumers are continuing to be concerned about where are they going to charge this? How much range is there? We encourage consumers to look at installing a home charger if they're able to, or talking to their homeowners association about installing them. As far as pricing, though, we're definitely seeing a softening, as you mentioned, of both of new and used EV pricing. We're also seeing opportunities to lease these vehicles. And of course, we're seeing the new regulations come in, the $7,500 tax credit, which now is actually applied at the showroom versus waiting for your taxes. So they've simplified that process when it comes to acquiring an electric vehicle.
And Rebecca, in terms of the trends that you're looking at, because we know that for a while, it used to be all about the compact SUV, but then we saw a shift in that looking at pickup trucks. I wasn't sure how much of that was people looking perhaps for Cybertruck alternatives and things like that versus if that's translating into actual sales.
So we're actually seeing, some of the top interest on the site continues to be those pickup trucks for sure. And, but consumers are looking for all different types of vehicles. With electric vehicles, you've got options from a host of manufacturers, not just the Teslas and Rivians as you're showing now, but we've got the Ford F-150 Lightning, which continues to be very popular on the site. So we're still seeing a lot of interest in those compact SUVs, as you mentioned, but also in these full-size SUVs. we're also seeing consumers interested in, getting a good buy. One of the things we're looking at is that the market is moving towards a buyer's market. We're starting to see more supply. So that's absolutely one of the trends that we're watching really closely.
While we talk about a potential merger between GM and Rivian, let's also note that there are roadblocks too. Merging two companies is never a walk in the park, and integrating different cultures, processes, technologies can be a challenge. Also, there have been no official talks between GM and Rivian about a merger, so maybe we shouldn't get too excited. By the way, will GM-Rivian merger be a tailwind or a headwind for Tesla? Well, no one can say for sure. Ultimately, the impact of a GM-Rivian merger on Tesla would depend on how Tesla perceives and reacts to the situation. If the automaker sees it as an opportunity to push itself further and maintain its dominance in the EV market, it could be a positive force for innovation. However, if it gets complacent or falls behind in the technological race, then it could spell trouble for Tesla in the long run. The EV market is about to get even more interesting, and Tesla will need to be at the top of its game to stay ahead of the pack. Just like in any good race, strategy, agility, and a bit of luck will all play a part in determining who emerges victorious. And we do hope that's what Tesla arms itself with in this war for EV dominance. So what do you think about the potential GM-Rivian merger? And how do you think this collaboration could affect Tesla? Let us know in the comment section. If you'd like to know what Tesla has been up to these past few days, go ahead and click on the next video on your screen. See you there.